Evening. It's Sunday, 25th August 2024. My name is Vijay. This is the weekend commentary. Every Sunday we do it. So today I've come with a very provocative topic, a provocative headline, which talks of whether Sensex will hit 1 lakh and cross 1 lakh by end of this year. Just a minute, please. Yeah, sorry, the fan was creating all the noise. So, while on the face of it, it looks very audacious, but if you look in reality, it is possible. Because from here, today we are talking of Sensex around 81,000. So, if you take about 18% to 20%, you would get 1 lakh. So, can we do 1 lakh by end of 2024? So, you see, there was a very interesting interview 15 years ago, which I'll just share with you about. This was done with Mark Galewski of Elliott Wave International and with CNBC India. And the interviewer was our very own Lata Venkatesh, the younger version of Lata Venkatesh 15 years ago. So just let's have a look at it as to how the interview went.
A technical expert, Mark Galashupsky, the editor of Asia Pacific Financial Forecasts at Elliott Wave International, joins us on the phone line from Gainesville, Georgia, in the US. Mark, you seem to be very bullish on India, looking at the charts of the Sensex. What's your target for the Sensex in the medium term, as well as in the long term? I believe you have a 15-year target.
Right. We're very bullish. In fact, this is going to sound extraordinary to many people, but we're looking at if the patterns we're observing, and this is all based on technicals, if the patterns we're observing are correct, the implication is Sensex 100,000 within 15 years.
Yeah. So this was Mark who bamboozled our Lata Venkatesh when he said 1 lakh by 2024, and she raised her eyebrows and she could not believe it. Now, cut back to this was in April of 2009 when the Sensex was about 10,000. Now, nobody in the right minds would have believed that Sensex could go anywhere to 1 lakh in 15 years. Remember, April 2009 was we were in the midst of this global financial crisis. We are just getting out of it, and there were still lots of problems. So it was unimaginable. But Mr. Galevsky, who is an expert in Elliott Wave and Elliott Wave International, is the primary company which has been doing a lot of research on Elliott Wave. So he stood by it even in 2016-17 when there was another interview. He said, I still stand by that. End of 2024, we'll hit 1 lakh. So here we are at 81,000. So what could take it to 1 lakh? If you look at Indian stock market or even Indian corporate results, they are not that good. This quarter, the results have been quite poor. The Nifty 50 has, I think, gone up. The profitability has gone up only by about 7 to 8%, single-digit profitability rise year on year. So in such a case, and political uncertainty is there, we have elections coming up in Maharashtra, Jharkhand, Haryana, and Jammu and Kashmir. Haryana and Jammu and Kashmir will go in early in October, and then we should have the elections of Maharashtra and Jharkhand somewhere November end. So we have global uncertainties, we have issues in the Middle East, we have our own corporate problems, we also have political problems, and we have RBI sticking on stubbornly to high interest rates. Then what is the chance of us really going to 1 lakh? That is, even though it's only about 20% from here, 20 to 25%, that is around 20,000, about 19,000 really speaking. Can we go to 1 lakh by end of 2024 or early 2025, give or take a few weeks? So let's try to analyze whether it is possible. Incidentally, well, we are all looking at the Middle East problem. Israel's mainline index, has today made an all-time high, and this when the war clouds are hanging over them. So when Israel itself is not so concerned, even the Saudi Arabia index is doing very well today. So should we be too worried about Israel being the black swan, Israel, Iran being the black swan? Of course, black swan events never tell us where they come from, so we should always be wary of them. But since we don't know when and where they will come from, we can only make some postulates on what we have today. Today, nothing great as far as India is concerned, but still, will we get to 1 lakh? Now, the key is in the Federal Reserve's actions. Now, Federal Reserve, whenever it has reduced interest rates, whenever the markets have gone up, albeit temporarily in US. But what has happened in India? I have studied data from 1987. 1987, and the great crash was there in October, and that was the first time the Fed did an emergency cut, and the market bottomed out the very next day, and we never saw those numbers later. We've never seen those numbers till date. Now, we were not having FI interest in FIs were not there in India in 1987, so it is no, we don't have a correlation there. FIs came into India in 1994, with Morgan Stanley being the first. So by 1996-97, FIs had established some presence in India. So the next time when there was a surprise rate cut was in 1998 because of the LTCM problem. And then the following time when Fed did an emergency rate cut and continued to cut was in 2001, January. Late 2000 itself, there was a lot of crisis in the market. So Fed chairman did it on January 5th. In 1998, it was the LTCM, and there was again a crisis, but limited to banks in US and some certain global banks. Then the next major cut was in 2007, which was again due to the subprime problem, and the crisis had begun, but it had not yet spread. But a series of rate cuts the Fed did, taking it almost to zero. Then we had another rate cut cycle in 2018 because you see there was again some crisis brewing, but not a very major crisis, but nevertheless a stock market crisis was brewing in 2018. Then we had a cut in 2020 because of the COVID. So COVID was an extraordinary thing. Not only rate cut already had come down to zero virtually. Then they did the quantitative easing. So we'll not consider quantitative easing. We are only looking at about the rate cut because quantitative easing has started in 2008 October, but the rate cuts had started in 2007 September. So let's go back and see each of the times as to how markets behaved, at least Indian markets, how they behaved. So let me just share the screen with you, and let me take you here. Now, in the Sensex, if you see, the latest was the on 19 August 19, not 18, sorry. August 19 is when the rate cut started, and the Sensex moved up by about 16%. Okay, so that 16% in August. If you go by what happened in August 2019, and continuously rate cuts happened, and then market peaked out early 2020 because of COVID, and then it collapsed, and then in March they started QE. But just let's look at rate cuts, how the rate cuts moved. They kept on coming down, and it went up by 16%. So if you take up 16% today, then we are going somewhere to 95,000, assuming we are at 81,000 on the September Fed meeting when they are going to cut the rates. It's almost certain. So then let's go back to, maybe if it has gone up further, then 1 lakh is there. Then let's go to before that. That was in 2007. Now 2007, 18th September is when they cut the rates. US markets went up for about 3 weeks and then topped out, Dow Jones. But we went up, continued to go up, and we made a peak only in January 2008, which was, that's what about 4 months later. So 36%. So we have 4 months to the end of the year. So it was 36%. Remember, the first one is in 2019, the latest one, the market went up by 16%. And if it has gone to 36%, it will go to some lakh and 10,000, the Sensex. Then let's go to, yeah, here. Now let's go to 2000. On the last week of December, actually the early part of January is when the Fed reduced interest rate continuously. So it took off, the market, our market took off, and it came up by about 17%. And then we fell. Remember, we were falling down from a dot-com crash, and there was nothing really happening in other sectors. So yet we rallied about 17% on the Sensex in January 2001 till February of 2001. In within about 45 days, we had rallied 17% because of the rate cuts. Then we go to 1998. In 1998, somewhere in 5th of October, around that time, they reduced interest rates and continued to reduce. And then that went up approximately about 19%, if you really look at it. And then it came down. So we had a 19% in 1998. So we don't have 1987. I'm not showing you there. So we had a 19% here the first time. Then we had a around 17% in 2001. And then we had the high of 36%. Actually, Nifty went up by 40% in that period. That is in 2008 and 2007. And then we are talking of 2019. So if you really look at it, we have had rate cuts, beginning of rate cuts till the in the next few weeks to months. 19% in 1998, 17% in 2001, 16% in 2019, and the mother of all rallies, which is 36% in 2007. Now let's look at each of these periods, and let me just move out from here. Yeah. So let's look at each of the periods. So in 1998, the 1987 was there was actually no problem fundamentally. It was an overbought market, too much of speculation, program trading. So global, there was a crash, so that the Fed panicked and started raising interest rates. In 1998, it was limited to only the LTCM, but yet all the banks in the world could have been affected, so they took action. In 2007, subprime was, creating problems. So global problems would have happened. The global financial crisis started later than that. In fact, it went in 2008 in September when Lehman Brothers crashed. That was almost the end of the fall globally. Of course, the US market bottomed out only in March of 2009, but we bottomed out somewhere in October 2008, and we did a double bottom in March 2009. So the 19-1, 16% we rose. So if you take this 19, 17, and 16, if you take an average of 18%, then we are looking at around 95,000 on the Sensex, assuming that the Sensex is about the same as when the first rate cut will happen. We also don't know how much accelerated the rate cut will be. I'm assuming it will be 50 and 25, 25. There will be 3 rate cuts is what the market is expecting. Market is expecting 25, 25, 25. I'm expecting 50, 25, 25. I feel it will be 50 because, you see, I think the Fed already knows they are getting into problem, but not a severe problem yet. As of now, this is the first time, just before the rate cuts, markets are trading in a buoyant zone. It didn't happen in 1987, didn't happen in 1998, didn't happen in 2007, and in 2019. So actually, this is the most bullish markets globally. So if you go by that, it should actually, the markets should go up, Indian markets should go up more than 20%. Indian markets are also at near all-time highs. So if you use that logic, then we should go up more than 20%, which means you get your 1 lakh. So it is not something which you can say that 1 lakh is impossible. 1 lakh is very much in the realms of possibility. Of course, there could be many reasons why it may not go to 1 lakh. But if you simply look at what once Fed begins to loosen, globally other central banks begin to loosen. I expect RBI to cut interest rates in October. With these assumptions, assuming that there is no black swan event, there is no World War III emanating from the Middle East, based on whatever information we have as we speak, I think it will not surprise me if latest by Pongal, that is January 2025, we should see 1 lakh plus on the Sensex. Though there are a lot of negative things, political uncertainty, corporate sector results, economy not doing as well as we expect. So even at status quo, that is considering all things being equal, I still believe there is a possibility that we may reach 1 lakh. Please note, I'm not a SEBI registered advisor. I don't expect you people to take decisions based on my thinking that will go to 1 lakh. I am prepared for 1 lakh, but I'm also keeping my powder dry to see that if there is a fall, then what should I do? So I have my stop losses. I have mentioned it between 24,200 for 2 days, or now say 1 week. If we take what we saw August 6th, August 7th lows, then we should be careful. Right now, based purely on data and on history, I think we should look forward to a bullish phase lasting several months, and probably hitting the elusive target of 1 lakh, where in 2009 that guy had the prescience and the analysis to say it will come in 15 years, and 15 years ends in this end of this year. So please take your own decisions. Whatever you do, I hope it is successful. I will see you tomorrow. So have a good evening. It's Vijay here signing off. Thank you very much.